Hi grade 12 students. So in this video we are going to do a special video guys, because this video guys is going to contain a manufacturing and also is going to contain inventory valuation. So just make sure that you watch until the end, okay, so that you're gonna learn something. So basically this question paper guys is going to prepare you to write a paper 2 for June exam, for trial, and for final examination, okay. So before we start guys, before I forgot, um please guys, please, we know that some of you have been supporting this channel too much. Some of you even join our extra class. Some of you even join our membership. Thank you so much guys for that. Some of you just subscribe. You will really appreciate that, because now guys, what we are going to do, as you can see, this channel is at 50,000 or is above that subscribers. So now we are doing a video edition of a video, whereby you guys, you are just sending a video saying congratulations accounting solution SA for reaching 50,000 subscribers. And you just take a video, either at home, at school, alone, with your friend, with your classmate. You can just do like the way that you can do it guys, and send it to me. I can really appreciate that, because what I want to do, I want to compile all the videos, and after that I'm going to post them on WhatsApp, on my TikTok, on my YouTube channel as well. You're gonna see yourself on this channel. So just do that before end of April, okay. It's a 50,000 edition subscribers. Let's do that guys. Let's do that, so that even on my side I can see that you guys, you really support my channel. You can even mention your province, you can mention your name, but it must not be more than 10 seconds, okay. So let's start with our video of today, okay. 3.1 is a, we have to choose the correct words, né? So I'm not going to write this down. We're just gonna talk about it, and we'll pass to the next question, which are relevant for today's lesson, okay. So they give us variable cost, factory overheads, direct labor, and so on and so on. 3.1.1, this cost to stay the same even when the numbers item manufactured change. It's a fixed cost, of course, because fixed cost, they don't change. Variable, they're the one that always change, okay. Number two, cost of raw material that are not directly involved to manufacturing. Raw material that are not involved, they are indirect, because direct are involved. Indirect material, okay. Then the next one, they say bad debts for accounting period. Bad debts are part of selling and distribution cost, okay. And the next one, selling and distribution cost, as well as direct material and direct labor, they are referred as a, this one is going to be variable guys, because selling costs depend on how many units are sold. So they are not always the same. They always shift left and right, decrease, increase, okay. Then the last one, once they talk about expense, rent expense of office, once they talk about office, just know that it's related to admin, okay. Then now to the main question. NYCN manufacturer, you are provided with the information related to NSC manufacture, a business manufacture heat rate monitors, né, for athlete, okay. Then they say that the financial year end is 28 February 2019. Required number one, we have to prepare a calculation that is related to inventory valuation. They want us to calculate closing stock on hand using weighted average method, okay. So we are going to use that method for 4 marks, and after that we have to calculate the direct material issued to the production. Issued to the production, you have to subtract the closing that you got on number one, okay. Then after that we have to prepare a note, this one, factory overheads, and after that we're going to prepare the production cost statement for 14 marks, okay. Let's start. On our information number B, we are given a direct material. That's the one that we can use to calculate our weighted average. Remember weighted average, guys? It says opening plus purchase minus return minus donation minus withdrawal if it is there. So in this case, guys, we have an opening of 55,000 plus purchase of 1,135,000. If you add both, you're gonna get 1,190,000. We don't have a return on this one. So this 1,190,000, they already calculate for us opening plus purchase. Okay, we say total value divided by total unit, which is 9,520. It's opening of 500 plus purchase of 9,020. They are going to give us that. And after that, we just simply multiply by unit on hand. How much is unit on hand? 560 at the end. We take at the end, not at the beginning. Okay, and it's gonna give you 70,000. Just like that. 70,000. Okay. Then the next one. The next one, they say that calculate the value of direct material issued for the production. Do you still remember the one that we have at the beginning? It was 55,000 plus purchase of 1,135,000 minus the closing. Then we're gonna get what? The one which was issued. Total available 1,190,000 minus a closing. Why closing do we have to subtract it? Because it's not used. It's gonna be used the next year because it's closing. Closing simply means that it's on hand. It's not yet used. It's gonna be used the next year. That's why we're subtracting so that we can get a used. Okay, then we get 1,120,000. Okay, simple as that. That's the answer for 3.2.1 and 3.2.2. Okay, now let's move to the next one. Remember, guys, when we go to production cost statement, because we already calculate this amount of used of direct material, we're just going to copy the same amount, 1,120,000. Remember, if you're opening a bracket, you're going to say opening plus purchase minus closing. It's the same calculation that we were doing here. Very simple. Okay. Then the next part now, we're gonna do this at the same time. Factory overheads and this one. So under factory overhead, let's start with factory overhead. We have a balance which was given. There was no even mark for that. And number two, we have to calculate indirect material. Okay, indirect material is under information number D. Okay, so actually when we calculate indirect material, we start with opening plus purchase plus any addition minus a return if there is a return, and after that we have to read the information as well so that we can understand what goes wrong. Remember, we only focus on the one that is related to a factory. Okay, our opening, it was given under information number A. It was 4,500. Okay, then after that they say that number D, indirect material. Indirect material bought during the year was 260 plus 260,000. Okay, and after that we also have a return, not return but a closing of 2,730. Okay, minus 2,730. That's what we do first. And after that, now let's read the transaction so that we can understand what do we need to adjust. Opening plus purchase minus closing. Okay, and they say that at the end of the year, it was discovered that the indirect material in the factory costing 1,750 had been stolen, which means that it was not used. At the end of the calculation, we must subtract it. Okay, then they say the material is insured and the insurance payout 1,130. Okay, remember, insurance compensation is not recorded here. is only recorded under income statement. Okay. Then they say that no entry has been made to record this theft. We only focus on the theft cost, then we subtract it here. But after calculation, I will tell you why. Then they say that the net loss of the theft must be treated as an administration cost. Remember, under part 1, guys, I covered that the statement of averaged cost statement or the averaged income statement. So that's where we are going to record selling and distribution and admin. Because here it's not required, this loss is not going to be recognized anyway because we are not doing what? Average income statement. Okay. Then they say that indirect material used is divided between the factory using the following ratio. They say that the factory is 1, admin is 1, and selling and distribution is 3, which means that we're gonna say 1 out of 5 because 1 plus 1 plus 3 is 5. Okay, now we have to allocate. After allocating, guys, that's where we can now subtract what? At the end, the answer that you're going to get here, you're going to subtract it with 1750 because that one we can't allocate including it here because that one is for factory only. Okay, then it will give you if you do calculation properly, it will give you 50,604. That's how you calculate in indirect material. Now let's go to insurance, the following one. Monthly insurance premium increased by 10%. Okay, and they say that on 1 January 2019, insurance paid the year amount to 124,992, and this include insurance paid in advance for March and April. Guys, advance payment are not allowed here. We have to do what? To subtract the 2 months. Okay. So, and remember the rent has increased. The same thing that you do when you are doing a income statement. You must apply it here. Okay. And they say insurance of 59,000 was allocated to selling and distribution and 7,440 to admin. So what do we do first? Because those other two, we are not interested to them. But we must first do the allocation. 124,992. Before we go further, guys, before we go further and subtract those admin, we must first subtract those advance. Okay, minus how much is advance? Remember, guys, they say that the rent increase on January, which means that the increase is January, February, March, and April. It's a 4 months. Why 4 months? Because there is a 2 months in advance. Okay, so which means that before, remember that in total, guys, it must be 14, which means that before it was 10 months and after increase is 4 months. How do we get 10? Our year, guys, is ending February, which means that it started March. If you count from March until December, it's going to give you 10 months. That's before increase. After increase is January, February, March, and April. We must count March and April because they are paid as well. And we open a bracket and we said 110 over 100. Why 110? Because the rent has increased by 10%. There is always 100 here. If they give you 15, it's going to be 115. And if you do this, let me try to do it step by step. We open a bracket, 110% is going to give you 14,4. This 14,4, guys, is the one that you're going to use to divide it here. You're going to say 124,992 divided by 14,4. It will give you a month, for 1 month before increase. 124,992 divided by 14,4. It's going to give you 868. This is for 1 month. Okay, but this for 1 month, you must first increase it by saying 110 over 100. 110 over 100 It's gonna give you 9,548 per month. Okay, but now you have to multiply it. You must multiply it so that you can get for 2 months. Okay, then you will get 19,096. That's how you do it. Very simple, but it's a bit of process. So if you don't understand it, you just have to pause and rewind so that you can redo it again. Okay, after subtracting, guys, that's where you can now say minus the one that is not part of factory overheads, admin and selling and distribution. They said is 59,520 and 7,440. Okay, then it will give you 38,936. Okay, then after that we don't have any other factory overhead cost that we were required to calculate. You must add all of them. They will give you 706,440. Okay, and after that you just take this one, you bring it here under factory overhead 706,440. That's how we do it. This one is 0, my student. Perfect, just like that. Okay, now the next one, salaries and wages expense. So this one we are looking for a direct labor because we haven't yet calculated direct labor. Remember at the beginning they said that the direct labor is 467,720 before adjustment, plus the one which was not recorded for factory direct labor. We have to take a gross of 312,850. Remember, guys, contribution are also added. Deduction don't add because they already give us a gross. Okay, it's gonna be 7,002 plus 2,428. You add a gross plus contribution under a direct labor. Even indirect labor you do the same. Okay, then it will give you 790,000. So a prime cost, the next one, prime cost is like a total direct cost. These two you just add them together. This one plus this one, it will give you 1,910,000. Okay. Now because we are done with this one, it's almost done. We just have to add these two. It will give us total manufacturing. Total manufacturing will be 2,606,490. Okay, work in progress at the beginning, it was given, we just copy and paste it. Okay, and the next one, let's go to these two. Okay, how do we get them in this case? Work in progress at the end, it was balancing figure. So total cost of production is the one that we have to deal with it. All right, so if you check, we have been given the sales amount and the other information that can help us, and cost of finished goods. Cost of finished goods is the one that can help us. We have to say cost of finished goods of 2,512,950. Okay, and after that we have to take the finished good amount, the closing we add it back, the opening we subtract it. It's more like we are doing a reversal, so that we can get this cost of finished goods. Okay, because this one that we take from number C is a cost of sales. So we're not looking for cost of sales, we are looking for cost of finished goods before what? Before adjustment of opening and closing. Okay, let's do a reversal. We're gonna add 80,500 and minus 101,450. Then it will give you 2,492,000. Okay, then now we can get this one, work in progress, at the end as a balancing figure. We just simply have to get total first, this one plus this one, and we write it here as 2,681,490. This one minus this one is going to give us this amount. It's going to be 189,490. Very simple. You must write it with brackets, a balance at the end. So that's how we approach this kind of question. Imagine all of this item that we were doing, guys. It was containing almost to 35 to 40 marks. Yeah, that's a lot, guys. That's a lot. So thank you so much, guys, for watching. Don't forget the video that I requested, guys. Please, let's do it. And also, let's keep subscribing so that by the year end, guys, we will be celebrating 100,000 subscribers. We're gonna keep uploading more videos so that you guys, you can keep learning. See you on the next one. Okay.